Welcome. I'm just going to go through the system I use and explain how I think you can do a lot better out of this market and really extract a decent living out of this market. If you're missing trades, or if you're taking trades and getting stopped out only to see them run, then you need a really efficient system to be able to go into this market. The volatility is excellent at the moment. It's really, really good to have this kind of volatility so we can make good income. But unless you go into this market fully prepared, this is, you're going to see yourself stopped out only to see this run. So it's about getting the right entries. It's also about timing, it's about preparation, but it's primarily the whole fundamental thing has got to be structured to a system. If you have not got a system, then you will not be able to really capitalize on this volatility we got. Let's take a look at the oil. Now, today, I took a decent couple of chunks out of oil. This is my live account, and it shows my entry. This little blue line is my entry. That 150 there is the total number of pips at the point in which I took the trade. Took the screenshot. Sorry, it's 150 pips profit from this entry just above 99, and you can see it's just going into a resistance area there. But this is my target. This is part of my IG platform, and you can see here that's I identified the target just under that 150 mark, and we're nearly $102 now. So we're actually, as we speak, we're right up here. This is all documented in the room, because if I now go to the other slide I've got for you. Let's just flick through. Sorry, I should have had this up and running properly. Yeah, so this is what I posted today. So I took a trade in the Dow today and got stopped out. Instead of Dow, it should say Dow. I went in at 575. We're currently 490 now. So I thought this might really pick up from yesterday. We saw a decent move, so I thought we'd have a nice pullback. Actually, I said here I've taken oil at 940. I actually got about, I think, about 905 in the end. My target was 106. I took it off and then re-entered for because it was moving so well. I just took 150 pips off and then re-entered. So this is a 10-minute chart of the oil, and what you can actually see here is this pink area here is last week's invent range. So for those of you who may not know, at 3:30 on a Wednesday, I'm also in a gold trade off the lows as well. That's some $4.50 up on gold at the moment. So those of you who don't know, every 3:30 on a Wednesday, there is the inventory data for oil, and this is the last week's range. So there's several reasons. So my system incorporates several elements, takes into account several elements. It takes into account the invent range. It takes into account this purple line here is a key level. There's a key pivot for the week, which I use. And this dotted line is the previous day's close. So the dip down there at 98.50 was, actually, I've been in oil 3 times today. I took oil, took oil down here at 97, took it off at this resistance 99, and then came back here for this, I think I got it about 99.10 in the end. 98.55 was the session cash session low, and then I bought this pullback again on the 100 mark. Anyway, so these areas here act like magnets. Whatever happens around the gap is going to determine what can happen to a market. What happens around the invent area is going to have a major impact as well. This acts like a magnet. So if you've got a huge magnet like that in the market dangling down in front of your trade, and you're trading the right side of it, then you can get into that. But this is the main part of my system. And you'll see how this is all marked out. I'm not going to reveal how this is marked out, but you can see how these pink areas here were my target entries. This is 98, this main one here. This has got a dotted line, a red line, and a pink area at 98.43. And then we started to see the volume come in. So I'm not interested in indicators. I'm only interested in support and resistance and volume. That's all I'm interested in. That's all my system works on. So I'm just giving you an insight into how I would come into the market prepared and how I would plot this up. I'm not going to reveal how this is plotted. So I've been day trading for a long time now. I started day trading in 05, 06. I believe it or not, I actually started day trading on soybeans on the ags market, which is fantastic. But what I realized was in the aggregate market, particularly soybeans, is that I could plot reliably what to expect on the day on the cash market based on the certain levels that had tripped in previous trading cash sessions. So that is exactly what my system is based on. And so I'm going into these cash market sessions with very fixed methods of measuring these markets and picking off those levels with my system day in, day out. I do the same thing every day and expect the same results. So I run a live trading room. It opens 10 minutes before the US cash market opens. It normally closes about 45 minutes later. And before so I'm trading live in the room on a live account. I am then giving you scenarios of how you can potentially take trades later in the day. Always a cash session. I don't hold trades overnight as a normal rule, primarily because I'm using futures market. I'm using a lot of leverage. Okay, so if you want to come in my trading room, let me know. Let me show you a couple other trades I've done. I'm in gold at the moment. This is a 10-minute chart. So patterns are important, but the most important thing for me is volume. It's the lifeblood of the markets. If you want to find out where the major institutions are buying and selling, then it's really box simple. If you're not relying on volume, then I think you should be. Okay, so as you can see, I'm not showing you any indicators. I do have some indicators on my bigger time frames, but I'm really not that bothered about indicators. That's not what I'm looking for to pick trades. Like I said, it's all about a system. So I don't think you can go into day trading and investing. As a day trader at my screens for quite a while, I do use these skills to refine my entries for investments as well. And I use day trading for hedging. Yeah, we all know that even good trends don't go straight up, or if you're selling straight down. There are days, if you're investing, there are days when a stock will have a decent pullback. So one way I like to invest is I actually use my day trading skills to hedge my trades, which enables me to stay in longer term investments and derive an income from day trading as well. So day trading is my income, and investing is my, I trade my SIP, my pension, and I've actually found a loophole in the system, in the pension system, but I'm not going to go into that today. It's a legitimate loophole. It's not an illegal loophole. I'll save that for another session. But right, I'm in the gold, and you can see that. Let me just try and grab. You can see my entry down there on that blue line is picking up the entry down here. So I've gone in round up the $1,900, $1,900. Because commodities operate, one of the beauties of commodities, they love round numbers. These markets absolutely love round numbers. They do dip under round. If you've got what we've seen in gold today is very common behavior. Let me just grab the pen again and I'll show you what I mean. If you've got a big round number like 1900, it's very, very common for these commodities to dip underneath these round numbers. Actually, I've got this is on 1901 at the moment. But if they dip under these big numbers and then subsequently hold them, that is incredibly bullish. That is a big bullish flag for commodities. So that's why I've taken gold at this 1900 level, or just above 1900. And I'm looking to get potentially, I think this week we might do, if we get to follow on volume in the bigger time frames, we might get into the 1945, 1950 area. That's my target over the week. But as a day trade, I would, particularly using a lot of leverage, I would take this off at 1910 unless we get a really good burst and a pullback. So yeah, if you're using a lot of leverage, then these kinds of moves, $10 move in gold or 150 pips plus in oil. Well, actually, in fact, I'm probably up about 350 pips in oil today because I've taken 3 entries. That's the way that you can make a sensible living. So in terms of day trading alone, these markets move, well, in terms of investing as well, these markets move sideways 80% of the time, normally. And that normal statistic is probably warped by the fact that we've had an interesting couple of years with COVID pandemic and of course now the war. So that statistic is probably out the window short term. But overall, these markets go through lengthy consolidation periods. Well, in fact, let's look at gold on a daily and I'll show you exactly what I mean. So why is that relevant? As a day trader, you can't sit in markets that are moving sideways for days and weeks on end. How are you going to make money out of a day trading career if you're sitting in sideways markets? I need volatility. The more volatility, the better. And we're certainly getting that volatility now. So if you're trying to day trade and looking for breakouts, then unless you've got a system for day trading volatile NASDAQ stocks, good luck, because you're going to really struggle. But you can see how important volume was here. So the reason why I'm looking for short-term moves in the gold at the moment is because there's huge amount of support underneath here. It's hitting the round number. It's delved under the 1900 and then resurfaced. So, okay, we've got a lot of selling up here. We've had a lower high up here, which has created a downdraft. But we come right back into the 1900. And the volume at the moment is picking up. So that's why I would buy down here, and then see if I can at least get some volatility to take this back up to 1950 and potentially beyond. So that's why I'm engaged in gold at the moment. Last year, gold was terrible. Really not the place to be if you want to day trade, because yeah, I don't think you can make unless you've got a system that adapts to very tight ranges. This is rubbish. You get very shallow moves here, very shallow moves, and then most of that was actually done overnight on a Sunday night. Very thin, shallow moves. But if you then move over to oil, which is one of my favorite markets, if you move over to oil, you've got a lot more volatility, a lot more potential for breaks and sell-offs. So this, you can see part of my system is depicted on here as well. So down here in August last year, we had a really handsome pullback into this May level, and then we went on a huge run. So this is what I like. This is quite a contrast to gold. Okay, you get some shallow range days. One of the biggest advantages of oil is the fact you get invents. So once a week, you get a piece of data that really shakes the market out, which is perfect. I didn't mean to do that. Let me put that back. Which is perfect. You don't get that in anything else. So you can see based on this fib system that when we broke, the first breakout was to this resistance level, 95.80, 90.60. We broke up into 130, and this, look at this chart pattern here. This is an incredibly bullish chart pattern. I'm a massive fan of this sort of symmetry that you get in the markets. And you can see how all this support down here, basically it's what I call a boomerang trade. You have you've broken up, and then you boomerang right back to the breakout area. Okay, you get a lower high here, so it gaps. The next time it runs up, you hit the gap and fall right back. Then we're in another wave pattern, which is getting a series of lower highs here. But this is an incredibly bullish pattern here. This 3 touches of that trend line support is very, very bullish. And you'll see it in many commodities that have broken up. Gas, I talked 2 years ago, I was almost shouting at the screen, saying buy gas, because I saw the potential in this. And so I would look, I think we've got invents tomorrow. I'll go through what happens on invents in a minute for those of you interested. But yeah, I think we're going to at least 105 on oil, and we're only 250 pips away from that. If I go back to so if we go back to a 10-minute chart, you'll see how this all knits together. I talked about this pink zone. For those of you who just joined us, this pink zone is last week's invent range. So we're just going, so the potential here is for 270 and 300 in this oil, and but you can tell why. One of the reasons I like to stay in a trade is if I see a volume increase. If we go up on an increase in volume, then I stay in it. If we go up and we see a decrease in volume, I'm obviously not going to go in it. So that's simple. You do not need to have really sophisticated, complicated things in trading. Trading is just bog simple, isn't it? If there's more buyers and sellers, or more sellers than buyers, then you need to get right on the right side of that trade. So why bother with lots of indicators when all you need is volume? Because that's exactly what is going to keep you in a trade or potentially get you out of a trade. All right, so like I said, the once you come out of my live trading room, we go into an alert room. So we have a closed Telegram group that will have all of this in it, so that you can pick up trades like this. So on the 17th of March, this is I've gathered together trades from each day from the last 3-4 weeks. There's 154 pips on that oil trade. Some more recent ones. This was a Fed day, huge move up on Fed day. I've got about $10–12 move on that one. This was recently 91 pips on that oil. The other day, a couple of days ago, as oil was pulling up, 107 pips on that trade. My target was up here at 110 on that day, and so on. 113 pips, 125 pips. So these are all screenshots, 171 pips of my live account. It's a Dow trade, and so on. You get the picture. So these are all documented on my Telegram room, and all there for you to pick and choose. So if you want to come in my trading room, drop me a line. I'll give you my mobile number so you can find me on WhatsApp. Best you drop me a message on WhatsApp, and I'll tell you more about what we do in the trading room, and then you can let me know if you want to join us. Any questions? Let's have a quick look around and see what gold's doing. Gold's pretty pathetic, really, at the moment in terms of the range. The volume has picked up since in the run up to the top of this hour, but it's struggling at the moment. So I'll stay in that gold trade and then see if probably get my stop to break even and see if I can get at least 1910 out of it. The volume tends to come out of gold and comes out of oil as well around about 7:30 UK time. So that's the time I'll come back and look at this and see if my day trade is really worth holding on to. Let's see if I've got any profits in there. If I'm using less leverage on gold. If I'm trading oil, I do tend to sort of watch over it all the time. But with something like gold, I'll put a trade on, intraday trade, and then see if that can do well for me on the end of the day. So we've already seen 1911 up there. So the potential for 1910 is good. If I can just get a bit of a lift in the volume. So let's have a look at what Dow's done today. So I actually got stopped out of the Dow. Benefit hindsight, it was incredibly weak, but I did buy it. We came into the cash session looking bullish with volume as well. So this was the open period. Had a nice volume spike, and then the volume did look okay for the first 30-35 minutes, and then we just dropped off. So I got in the trade, got stopped out, and just left it. Better fish to fry on gold and oil. It's a day for gold and oil, definitely. Very much more for oil. Okay, I caught a decent move on this Dow yesterday. You can see this pattern I had measured up. This was a key intra-month pivot down there at that low. So I thought the opportunity to pick up that low and run with it was there on that basis. Okay, so stop out in the Dow, profit on the, or three profitable trades on the oil, and I've got a trade on the gold, which is currently in profit but not doing a lot. What else is there? I've not looked at anybody who trades the DAX. If you're looking to trade just the breakfast time in the UK, I would suggest the DAX. FTSE is very quiet normally. So you can see the 7 o'clock open here in the DAX. Saw it drop. Notice how you retrace to the open range. So you get this happening. You get direction, wave 1, pullback, move, 1, 2, 3. And yes, I am a huge Elliott wave fan. For those of you just joined us, I'm actually going to wind up quite soon, unless you get a lot of questions for me. I have recorded this, so I will make sure you get a recording so you can go over some of the calls I've made, some of the trades I've made, and some of the main points I've made about how these markets perform. So you can see this is a good buy signal up here on the DAX yesterday. So we had this 3-touch. This is really, really powerful on the upside, on the downside. Ultimately, you get a 3-touch breakdown today if you include these resistance levels as well. So it ticks several boxes on this short. Very low. Once this, this is a good example of very clear signals in divergence on these markets. I tried to make this point earlier and I didn't have a good example in front of me, but this is a good example. If you've got a market going up and the volume's coming down, guess what? You should be getting short, particularly if you've got a system like this that takes you into pullbacks like this. So there's the open range, like I said, direction, pullback, and then reversal just around about lunchtime as the US data comes out. Good trade, very, very good trade. And if you, let me think. No, okay, I'll forget that. Other boxes this ticks for a short is primarily the wave 1, 2, and 3. The other coming up on lower volume. I mean, how is that gonna progress? Think of it logically. How is that market going to progress if the initial volume was a sell volume and the follow-through volume was lower? Even logic tells you that if that returns to the breakdown area on low volume, then the next move is highly likely to be a drop. So again, that's why and what's the point of indicators? Let's stick some indicators on here. Let's stick Bollinger Bands. Let's stick stochastics. The point in which this market here, the point in which this fails, the stochastic is actually telling you is actually above the midline and has crossed and potentially telling you to buy. So if you're studying the stochastics and looking for the best possible entry in this short DAX, then you're wasting your time using, in my book, and to my system, you're wasting your time looking at stochastics. Any indicators you guys look for? Any indicators you are interested in? Let's look at RSI, classic like RSI. Well, again, at the point in which this trade was in my system a good short entry, you were seeing the RSI holding up and breaking up. So again, as far as I'm concerned, that proves my point that all you need is volume. In fact, let's get an update on the Dow, because I'm seeing that this is continually dropping. Yeah, again, if you're really glued to this screen, to the chart, at the point in which these markets are potentially in the best time of the day, which is at the open and 30 minutes into the open, you can see that when we did pull up, we didn't break these sorts of volume levels. That's typically the sort of volume level you'd need to see a breakup. Okay, and having said that, we actually came up on low volume yesterday. See, we were divergent. That's unusual. To see that push right up on consistent low volume is unusual. But when we did push up today and hit the top high of the open range, you saw an increase in the sellers come in, and at the moment there is no reason to buy this at all at the moment, unless you get higher close up here and the volume ticks up. I think another thing that's common in traders, particularly less experienced traders, is to pick bottoms. If you've got a direction at the open and the direction is clearly to the downside in this one, you're going to find it very, very expensive on your account if you're trying to pick a bottom. Normally, or most days, the direction that you see at the open is the direction for the day. So if you're busy looking to buy this Dow because you think this is it is a support level. Yesterday's low was 320, so we've not touched yesterday's low. Unless we touch these kinds of support levels and the volume spikes up, I wouldn't go anywhere near it. You need to concentrate on, if you want to stay the right side of a trade, once the cash session has shown you which way it wants to go, the trend trade is to short highs. The counter trend is to try and buy bottoms. And if you are regularly trying to buy bottoms in this and getting stopped out, then just stop. The direction of today is clearly short. Don't buy bottoms. That's my message to you. Even when you see it, this is pushed up from 450 to 640, but that's again just a pullback. Why do I say that? Because it follows. If you don't understand Elliott wave, I thoroughly recommend you get into it. I've read Elliott's book. It's really boring, and I've read it a couple of times. You have to read it. It's a very dull read. But of course, the basics are. Excuse me 1 second. I'm just going to take a sip of drink because my throat's drying. The basics of Elliott wave is you get impulse, pullback, direction. So at the open, the main initial thrust was actually down. So you can see it's down as far as this resistance level is. So we did a 1, 2, and then 3, 4, and 5. So this push up is not a bounce, it's not a buy signal, it's a wave 4. You get 1, 2, 3 is normally the biggest wave. So direction, pullback, move. So impulse, pullback, move. If the wave 3 isn't the biggest wave of the day, then you may have a very sideways market. This lift up here is not a buy signal. It's a wave 4 retracement, getting ready for a completion of wave 5. And that's a very, very common mistake where people will see a move up here and start buying pullbacks, expecting that to push up, and more often than not, it doesn't happen. All right, so I've gone through quite a few different elements of my day trading system. Anybody got any questions? Are you able to type your question into the box? You should be able to type in. Let me just check, make sure you can. Hang on. Oh, you can, yeah. Did you want to ask a question? Hi. Or you just want to say hello? Okay, ask away, type in. I've actually got a problem with my sound system, so I can't even take the volume off, even if I wanted to. If you're able to just type the question in, would you suggest to get gaps in the morning? Right. Trade in the direction of the gap. So if I call up the DAX, now I think this is up to date. Let's have a look. Yeah, this is up to date. So yesterday the DAX closed at 13,927. So this the sell into this 927 was a gap fill. So if you find yourself with a setup, with a short setup, your first target is going to be the gap fill. But if my system would have told you that the likelihood was that that could carry on. Let's look at a 30-minute chart. I'm not going to go through the exact, but I've got the main part of the system is called my anchor chart, and that gives you exits. But I'm not going to go through that today because that's a key part of the system, which you need to learn on the program. Okay, so this is the DAX on a 30-minute chart with the relevant gap here. And you can see when we're even got higher, we're coming down on high volume. So we're coming down and the sell volume is increasing. So another reason not, and look at the buy volume on the bounce is really low volume. So you can see why I just love the volume on my charts, because that's all I need. That's really all I need. Okay, so my mobile number's in there. If you want to send me a message on WhatsApp and set up a chat, then do so. I'll tell you about what we do in the trading room and how you can get access to my trading room, and then we can take it from there. Brilliant. Last call for questions, and I'll leave it there. I've been talking for 40 minutes. Anybody who missed the beginning, I'll let you have the recording. I'll send the recording out on email and in the meetup room. I presume most of you come in via the meetup. Some of you may have come in on the email. All right, let's get an update on the gold. It's really not doing much. No, it's really recent volumes have been impressive. You can see I've got a 50-day average on this volume. The volume has been stepping up So there may, but it's overall, it's got, seems to have very little juice, doesn't it? I'll leave the trade on because I'm still in profit, but not by much. Titchy profit on there at the moment because it's potentially, it's getting quite close to my entry point. Okay, so you can see that is not going to do much for me. One final point you can see on the, we actually gapped up. The gold and the oil actually, they actually shut down for an hour every night. So that was so we actually gapped up or pushed up after the close. And so the 9 o'clock UK session, or European session this morning, pulled right back into yesterday's support. And at the moment, dips are getting bought, but it's just not doing much. Brilliant. All right, no more questions come in. So drop me a line if you want some more information. These Tuesday 6 o'clock sessions are going to be regular. So you will continue to get links for this. So join me if you're interested. There can be different subjects. We get an update every Tuesday. We get an update on what the markets are doing, and then I'll talk about where I think the next moves are. And we go over some of the basic setups like and trade alerts that I give in the room, in the alert room, and the live session trading. All right, brilliant. Thanks a lot for coming, and look forward to seeing you again or talking to you if you want more information. Thanks a lot. Bye.